One. This is such a proud unit of Cirrus Research. The latest issue of the Signals Report is just out. It's a compilation of our asset allocation focus. It looks at stocks versus bonds, growth versus value, large versus small, etc. The title of this issue for February, Improving Fundamentals Conflict with the Extreme Narrowing Underway. At the heart of this is this spread between really the Nifty 7 and the rest of the marketplace. And to some degree, if the profit cycle was collapsing and slower and weaker, you would think that it would merit sort of a narrowing of the market just to focus on those few firms that are delivering. That said, what we're seeing is exactly the opposite. The profit cycle has actually been slowing for the last few years. It is now stabilizing. What's curious is that this sort of like departure between the very few largest firms that are outperforming and the rest of the market has created a valuation offset. This chart here represents our polarization measure. It looks at the leadership stocks in the US, the multiples of those stocks against the rest of the market. What we find is that we're now trading at an extremely high level. This is telling us that fundamentally, not just in terms of performance data, but in terms of earnings power, the sort of gap that's open between these leadership firms and the rest of the market is now very, very unusual, and it signals potentially a major break in leadership. What this reading suggests is that at levels as such, typically trending factors start to invert, valuations factors seem to work better. Now, what's really curious is that when you take this measure and apply it to the mid and the smaller cap arena, we're not seeing the same thing. And so what this is telling us is that the profit cycle, as it's stabilizing, it's allowing investors in the small mid-cap arena to focus on earnings growth. So more of a fundamentally driven market. That is not what's happening in the larger shares. What's curious about this is that a lot of folks are sort of like drawing this parallel between this period and the sort of 2000 internet bubble. What's curious, though, is that the polarization that we saw in large cap was pretty much the same that we saw in the smaller cap arena. So a very different market. Bottom line, though, is that what we think the valuation-centric market will likely prevail. Our style oscillator in the last 6 months has really barreled from a growth overweight into a very strong value overweight. This is important because it is really supported by what we're witnessing in the earnings cycle. And however, this divide that seems to exist right now in the marketplace seems to be going the other way. At this point, we would continue to suggest more caution, a little bit more focus on valuation, and less on trending. Take a look at the full report, and as always, happy to take your questions. Thank you.